If I see people jumping in that on my YouTube comments that have clearly no clue about Bitcoin, but they feel the need to go on a Bitcoin only YouTube channel that does every single day or just Bitcoin content, they feel the need to jump in there and dunk with like such a long message, like why Bitcoin is doomed and what is like. I think as long as we have that, we're very fine. We need the yin needs the yang, the love needs the hate, like all of those things. And so it all leads to like open interest, and interest is good for Bitcoin. It drives up the volume, it drives up the overall liquidity of the market and overall the liquidity of the network. And so it's a good thing. Like I was very different like 3 years ago when I like first like now. Wow, almost 6 years ago when I first came into Bitcoin, where I was trying to defend it and like was getting upset when someone was saying something bad about it. And I had that professor when I was at university back then who opened in his presentation about his Bitcoin negative speech. And he always opened like that. It was known on the whole university that he takes every opportunity to dunk on Bitcoin. Now in hindsight, I'm like, he is introducing Bitcoin to everyone in the university and makes people talk about that are not interested in Bitcoin at all. And it's not even like, it's not a Bitcoin conversation. He's not even in economics. He's in IT security, a professor. He didn't need to talk about it at all. And so I think my overall point is just like, interest is good. So Larry Fink being forced to talk about it, Saylor, I mean, it's a hard thing to say, but Saylor being forced to adopt it on his balance sheet and then forced to talk about it. I mean, it's not a forced thing, but I think you guys know what I mean. But on all those players being forced to talk about it and having an interest in it, it's a good thing. It's like it leads to more Bitcoin adoption in the end, in the long run.
Yeah. No, I love all the responses because it's funny. Like and I know I've said this before, like I lean toward the revolutionary side, but I think I do agree with you guys. I think I'm 51-49 that, because I've said as well, I think anytime you can get Bitcoin on someone's lips, that's a win. So whether it was Donald Trump or Elon Musk, or it doesn't matter who it is, I think that is a win at the end of the day. So I think I'm on the fence, but I fall toward that side. And that's why I said I came down Jor last week in that argument where like the two guys on one side were fighting and two guys on the other side. And I kind of came down on like I see both sides and kind of just, we ended it with that and just like my thoughts on both sides. But what do you guys think on just volatility in general? Because one of you just mentioned this, but this is the other fascinating part about Bitcoin, where we're going, where, like I just had Stephen Paranod, we talked about this last week, Robin, right? You've had him on multiple times. I had him on last week. And, he's like, yeah, the volatility is going to go way down, but the institutions, you're going to have a lot of this driving bigger prices. Like if it's only a 40% drawdown instead of 70%, well, 40%, but you're going from 200 down to 1.2. That's 800,000 versus only a 60,000 drop we just had, now. So it's going to be wild to see that. But at the same time, what do you guys think about people being drawn in? Because obviously, we get a lot of people like, oh, it's boomer coin. We haven't hit the peak hysteria of like people are learning in 2017 like what Bitcoin was for the first time, and then now it's kind of like, well, the return's there. I can go into Nvidia. I can go into this NFT, this new scam coin, altcoin. Like, what do you guys think when it comes to volatility going forward and how that will shape adoption and the price? Because if it is less volatile, and it has been, then how does that shape people wanting to come in?
So my thoughts on that are that I think it's going to be very volatile in terms of if you're looking at it from Bitcoin's fiat price. I think it's going to be very volatile forever. Forever. Like I don't think that changes, at least in our lifetime anyways. But kind of my theory on this is that once Bitcoin gets to $1 million, we start measuring it in sats. So it'll be like 1 cent per sat. And we can't really do that until it gets to $1 million. And so when you see sats being priced, I think that honestly will bring a whole new crop of people in there, because that's what I think one of the biggest things that holds people back is the unit bias. They think that Bitcoin's too expensive, unit is $60,000, because they feel the need to own one whole thing of something, right? They don't know that sats exist. But I think once it gets to $1 million, we won't be pricing it at $1 million. It'll be way too big for a ticker. How many tickers have $1 million item on it, right? So it gets repriced. It gets reframed into sats. And so I think that when it moves from 1 cent per sat to 2 cents per sat, Bitcoin in the background moved from 1 million to 2 million. So like that's massive. If we consider the fact that we just dropped like 40,000, everybody's losing their mind. One sat, 1 cent per one sat, 2 cents per one sat. That's $1 million swing in the background, and people don't even know that. That I just think that we won't even know what the price of Bitcoin is in a decade from now because of that. Because we'll be looking at it through a different frame of reference. That's my theory on it.
Yeah.
I don't know. I think it's really interesting if we as an asset, or like Bitcoin as an asset, gets from the one side, from a TradFi pros, and saying like, oh, it's so volatile, like it goes up and down 40%, like I cannot handle that, it's too much. But then we get on the other side, like the young 18-year-old traders that say, hey, I want to make a 1,000x in like the weekend, and both of them kind of like spit on us and say like, you're not volatile enough, you're not high return enough, and the other one is saying you're too volatile, you're too high return, like I don't want to have that asset. If we're sitting in the middle of that, we're sitting in a very interesting position, because we attract both pools. We attract both pools that do want to have the high volatility, the traders, the gamblers that want to go 40x short, 40x long, and like go on a Sunday, go on a Monday, like do all that crazy things. But then we also slowly attract the crowd that says like, hey, it's like an interesting asset over the long run. Now we have that weird in between where we don't belong anywhere, and so it's like, are we a tech stock, are we a commodity, are we gold? Like we don't really, like Bitcoin creates right now its own small asset class, its own small, like what it actually is. And we talk about that since I started listening to Bitcoin content 6 years ago. We always talked about the decoupling, and like we are getting away from other assets. So far, I don't know if it really has happened. I don't think it's long enough that we can say it's actually decoupled. But I think that's what we will see in the long run, where people on the one hand say, hey, it's not volatile enough, I cannot trade on it enough, it's not going up like 10x tomorrow. Yeah, and the other side is saying like, oh, it's like it goes down 40%, 50% in like 5 months. That's like, then I cannot use this because I cannot gamble my net worth on that. And I'm actually curious what you guys think on that, because I think there's like two characters. There's the character that actually can handle volatility, they can handle those things and has this long-term horizon, and they will just like buy Bitcoin and they are great with that. They have in the next 20 years like a 30%, 25% CAGR, whatever the number will be. And they will stomach the volatility, and they will make a killing out of it. And I made that calculation. If you go over the next 10 years and you have an asset that has a 10% CAGR every year, and you put 100K in there, you end up with like 260,000. So you make in 10 years from 100K to like 260K. If you go up to 40% CAGR, which is quite some bit, but people don't realize how much of a bit it is. You get from the 100K, not 260K, you get almost 3 million. Wow. And so sacrificing the short-term volatility does make a lot of sense for the long run, because you kind of pay for the huge upswing with the short-term volatility. And so I think there is this one character that is fine with the volatility, with the long-term kind of payoff. And then there's the other character that just wants to have like the 5%, 7%, 10% return in their S&P 500 ETF kind of product. And maybe Stretch can like capture that upside, and maybe that can then in that way flow into Bitcoin, and there will be a lot more stretches and a lot more things that can increase the adoption for that kind of character. And I have that weird feeling like 90+% are unfortunately in that category. And most of the real Bitcoiners, the long-term visionaries, they are, I think if we are 5%, I think it's almost too much.
Yeah, I mean, we talk a lot about the stock market, the world does, but the bond market is bigger. The people, there's more money seeking stable, low returns. They actually don't want the volatility, and to me, that's ridiculous. I mean, it's about total return. It's about purchasing power going up. And for me also, it's partially about ideology as well. So I don't want to be funding debt. I don't want to be funding governments or corporations I don't believe in or anything like that. So I think there'll be an ecosystem that develops around Bitcoin harvesting the long-term upside potential and paying off a stable return for the people that want that. That's what STRC does, right? And I think that Bitcoin is going to just constantly change until it becomes the unit of account and backs everything. Yeah. So right now, as it is, if it continues kind of performing how it is, hopefully maybe a little bit better, get some more attention for that, it will absorb capital from the traders that seek additional volatility because it's the stable side of their portfolio. When MSTR and Metaplanet and all of these other companies were what all Bitcoiners were talking about, they were saying, well, the part of my portfolio that lets me sleep at night is my Bitcoin, right? So the Bitcoin was their stable coin almost, like not really, but it was like the stable part of their portfolio. Now, a lot of those traders probably end up with less capital over time, but eventually that capital proportionally goes towards Bitcoin. And the bonds or the people seeking lower volatility, they end up purchasing Bitcoin maybe through an intermediary, like, MSTR is purchasing it on their behalf and spitting out a stable return instead of the Bitcoin return. So they end up creating more capital pushed into Bitcoin at a certain point. That's just where Bitcoin is now. But I kind of subscribe more to the idea of it being an S-curve than a stock to flow model or a power law or something like that. I think that there's going to be a point where it's really obvious. There's a boiling point and it's really obvious, and it needs to be massively repriced because it's at the moment where it makes sense to do that based on the rest of the world's understanding of this asset. So with that happen, that's what causes the S-curve adoption or S-curve price appreciation based on that. But when that happens, I have no idea. And even if you just look at Bitcoin without the S-curve, it's like you have to have, or the major upside is like 10 or 12 days a year. And you're not going to time those days, so you have to hold it to see those up days anyway. So it's the same thing. I'm just seeing it over like decades with the S-curve adoption idea that I have. You just have to hold it to see that happen. You're not going to be able to time it. You can't buy in after it goes up. You're not winning then, right? So that's the way I see that.
And it's interesting, we segued into the topic that I think Joe wanted to bring in anyways about adoptions and unconventional ways. How are we getting adopted? I don't know if you wanted to go there already now, but I think maybe it's a good time now for you, Joe.
The secret topic. Well, actually, I wanted to kind of go a little bit deeper into that because I really like what Forrest said there at the end there in terms of looking far out into the future. And I think that that's how you have to look at this thing. I keep saying it, but like, think of yourself as like a first generation Bitcoiner, like a first generation farmer. And when you think about the unit bias here, right? So let's just take Canada as an example. And Canada is not very old. Like the town that I'm living in is probably 150 years old, maybe. Like, I think that's what most towns in Canada would be celebrating. Like, that's pretty fresh. So when people first showed up here, you could probably buy this whole town for like $20. Like, it was considered to be like a township, right? And then as more people came to the town, they subdivided into sections. And then as more and more people came, they subdivided it further into quarter sections and half sections, and then lots, because they had to keep changing the unit that you measured it, because it was just, if you tried to buy a township today, what would it even cost? Nobody knows what the cost of a township is. And that's how I see that what the price of Bitcoin is right now, in the sense that in 20 years or 30 years, we won't know what the price of Bitcoin is. Nobody will know what the price of Bitcoin is, because it'll be like the township version of that. Right? So that's how people's perceptions change, is that as there's more demand, you have to keep cutting it, changing the unit that people measure it by, So it's more affordable. People can actually resonate with it and measure it properly. So I think that we're going to go through the Bitcoin phase to the Satoshi phase to the microsat phase. And if you think about how all that lines up, like nobody will know what the price of Bitcoin is at that point, because it'll be similar to a township, and nobody knows what the hell a township's worth nowadays. Like it's not even an option for people. You can't go into realtor.com and try to buy a township of something. So that I just wanted to kind of explain that, because that's kind of my longer term theory of how Bitcoin plays out. As more and more people adopt Bitcoin, it's going to be the same thing. We're going to have to keep changing the unit so it's people can resonate with the actual value of it.
Doesn't that get rid of the scarcity of Bitcoin though? Like you can just feed the world with one pizza kind of idea, just by cutting more slices.
It's funny because a lot of people actually, what do you guys think the percentage of the population that actually thinks that would be the case? Like, I think it's actually surprisingly high.
Yeah, but it's also somebody that just has clearly never thought about it. It can't be somebody, you can't think about it and have somebody be like, yeah, that doesn't make any sense, and continue to think that way. Like, I mean, there's very few that with evidence, I think, would continue to think that way, unless they have an agenda to push.
Yeah. What would a reasonable amount be? Like 50-50? More? Like, I feel like there's actual economics professors with degrees, years of schooling, who really think that if you change the unit that you're measuring it by, it actually increases the supply of that asset. I really think that we'd be the minority in the world who, even once shown that, subscribe to and understand what that means. Like it's just such a foreign concept. And that's the whole thing to Bitcoin to me, is like, it's literally like speaking a different language to people.
Yeah, it is.
That's how I think educators should be thinking about it, because you can't learn a language by watching a 30-minute video or taking a 2-week course. Like, this is something that you change over years. And it's the same kind of thing in Bitcoin. It's just so different than what we're used to.
Bitcoin, Bitcoin is another language. Bitcoin is another language. You have to, and you have to try to explain it through analogies, comparing it to things that people might understand. And these analogies are fundamentally flawed or incomplete. It's like explaining a circle by only being able to draw straight lines. You're going to get close, but you're never going to get there unless you connect like just so many dots that you can't see the pixels anymore, right? The digital gold only makes sense in the issuance, but people subscribe it to the way Bitcoin's price should be. And it's just, it falls apart there, all that kind of stuff.
It's hard even on the receiving end too, right? Like, it's hard to explain it, but it's also hard on the receiving end because your ego has to accept it. I mean, we saw the George Grobel guy or Noble guy, whoever that guy that was the other day, the macro dude, who was like, a huge long post on Twitter about how Bitcoiners, you're morons, like it's absolutely wrecked, this is a speculation, and he was just getting torched, right, by every Bitcoiner, and he was just blocking everyone. And he ended up blocking me. I think I've been blocked like 5 people in 17 years of being on Twitter. And it's just, I just said something about ego and like the Titanic meme. And he was like, I know more than you, or I've forgotten more than you've ever known. And then he blocked me. I was like, okay. So it's just like the hubris where like a lot of people, like a Peter Schiff, these people that are angry that they missed it. So you can, even if you crush it and you have a grand slam analogy, the person has to be open to humbling themselves and realizing, hey, my life has been a lie. Yes, you've lived your life. That part was the physical part was real, but everything, the incentives made you, or probably forced you to make a lot of decisions in your life that were untrue. This going back to the pseudoscience. So I'm going to get in debt. I'm going to go to school, get a good job, get up my 529, my 401k, my RSSP, my superannuation, whatever the hell it is. All these things were lies. And that's the thing that like people look back and their mind breaks. And so you have to, we could go down the road of how the mind breaking, right? But it's like, you have to not only teach it well, but the person has to be able to receive it. The humility ego test, it's wild.
Mm-hmm. And I think there is, there's something, I think there's 2 different characters. Again, there's like the character that has and legacy lens, that's how I call it, on where he goes in and looks at Bitcoin and he learned the fiat system, the in and out of it for his whole life. He really has a very clear class of like looking at things. And if you only existed in a Keynesian economics field of fiat science, it's very hard for you to see Bitcoin. You have been told that all your life, and they really have that kind of like narrow view. And for them, I can understand. Like those are sometimes very smart people. I don't want to even dunk on them because they are just like, they did all the right things with the information that are in front of them. They might made the mistake that not going out further on the information course of like searching in alternative sources some kind of information. But then there's also just a lot of people that have not thought about anything at all.